Good morning, I'm Lauren Hayes for the Finance News Network. US stocks fell on Wednesday as Wall Street failed to hold on to the sharp gains from the last two sessions. Investors are now wondering whether the market has become too optimistic about the potential for a central bank policy pivot, especially as recent Fedspeak has not deviated from raise and hold, higher for longer messaging. Overnight, yields rose sharply with the rate on the benchmark 10-year Treasury climbing to 3.7% after briefly dipping below 3.6% in the previous session. That put pressure on stocks for much of the day. Volatility in the 10-year Treasury market has also reached the highest level since the coronavirus-induced ructions of 2020. The Dow Jones Industrial Average fell 0.1%. Earlier in the day, it was down 430 points. The S&P 500 lost 0.2% and the Nasdaq slid 0.3%. Third quarter earnings season is not too far away, and it's definitely in the market psychology that the Q2 earnings season helped to stabilise the markets. Right now, there's this hope that the earnings season can stabilise the market and maybe come to the rescue again, the way that it did last quarter. Energy stocks led the sector on a good day for crude. Saudi Arabia and Russia, acting as leaders of the OPEC Plus energy cartel, agreed on Wednesday to their biggest production cuts in more than 2 years in a bid to raise prices, countering efforts by the United States and Europe to choke off the enormous revenue that Moscow reaps from the sale of crude. REITs and utilities came under pressure on renewed rate backup. In company news, Brazilian mining company Vale is in discussions to sell a $2.5 billion minority stake in its metals business as it seeks to boost its copper and nickel output to meet growing demand for the energy transition. Trading houses in Japan, sovereign wealth funds in the Middle East, and car companies are examining the asset. Tesla this year signed an offtake agreement with Vale for nickel from Canada, a sign of how the car maker is working to secure raw materials supply chains outside China. On the currency front, the dollar index was up 1%, with some of the best gains coming on the sterling cross. One Australian dollar has weakened slightly compared to the US dollar yesterday, buying 64.99 US cents. In commodity news, Australia is expected to grab about 20% of the world's lithium hydroxide refining capacity within 5 years, considering several companies are building refineries in Australia, which would turn locally mined lithium ore into battery-grade chemicals. Australia is the world's largest producer of the raw form of the metal, which is vital to the EV industry, supplying just under half of global demand. Gold lost 0.2%, silver fell 1.8%, copper gained 1.6%, and oil added 1.7%. The SPI futures are pointing to a 0.4% fall. I'm Lauren Hayes. Have a great day.